What's up, YouTube? What's up, Extreme Gains family? Excuse me, I'm Chuck. This is Extreme Gains. I am not a financial advisor. Nothing I say is or ever will be financial advice. Please do not take it as such. Today is Wednesday, February 9th, 2022, and this is the daily stock market live stream. Good morning, good morning, good morning. How is everybody doing? I hope you had a good evening and a good morning. Give me a few minutes to do my thing here, and then I will be with you all. I don't know why it's doing that. See if I can change that. I bet it shows that picture. Things are looking a little up this morning, aren't they? All right, do this. Get rid of that. Sound. Hello, hello. Good, good, good. Good, good, good. Stream quality is good. And let me, do I have to change this every day? Oh, I've been meaning to check that. The chat thing. Do I have to change that every day, or is it like that? Yeah, I have to change it every day. No, I didn't say 5 minutes. I said 5 days, motherfuckers. Custom. Days. Save. There we go. There we go. 5 minutes. 5 minutes, my ass. What's up, everybody? How is everyone doing? Good morning. Good morning. All right, let's get in here and say good morning to everybody. Whoa, there's a lot of y'all in here this morning. Wow. Can't see the first chat, but Box Top, good morning. KK, good morning. Angela, good morning. Alex, good morning. Ken, good morning. Jill, good morning. Rob, good morning. Tony, good morning. Wendy, good morning. Tino, why aren't orders getting filled? They should be. Where are you at? Who are you with? Tino, good morning. Tony, good morning. Trey, good morning. Steven, good morning. Chief, good morning. Martel, good morning. Nico, good morning. What? Just resubscribe, Dustin. Just subscribe again. Waterhead, good morning. CWD, good morning. Jose, good morning. Isla, good morning. Marvin, good morning. Thank you for letting me know, though, brother. That's what I'm going to send them, all this stuff. Ralph, good morning. M-Pain, good morning. David, good morning. Judd, good morning. Jude, sorry, brother. Raymond, good morning. Tony, good morning. Got you. Shadow, good morning. Flip, good morning. Sungrown, good morning. Jose, good morning. C's, good morning. Ross, good morning. Satari, good morning. Ken, good morning. Nada, good morning. Jordan, good morning. Satari, good morning. Giovanni, good morning. Kevin, good morning. Oh, and it skipped me. Sean, good morning. Ruth, good morning. Pros, good morning. Raymond, good morning. Rich, good morning. Peter, good morning. Thank you, Jose. I'm out. I'm on nothing but Red Bull. I only got one in me so far. I need to have another one here. Arturo, good morning. Raymond, good morning. Francisco, good morning. Ermin, good morning. Kevin, good morning. Atheist, good morning. Luke, good morning. Scott, good morning. Chris, good morning. Got Tar Heel and Payma. Yonda, good morning. Brenda, good morning. KB, good morning. Whitney, good morning. Peter, good morning. I think I got you. Saltwater, good morning. Blue, good morning. Rip, good morning. Jeff, good morning. Tsunami, good morning. How's everybody doing? Give me 1 second. I'm going to grab another Red Bull. All right. Here and ready. Everybody's ready to go. All right, let's take a trip around the park real quick. What I have on AMC today is the new time zone. Real quick, I'm not going to go into a bunch of details. We crossed into a new time zone on Monday again. It's an extension, so I went ahead and looked for the new snake. I found it yesterday, talked about it a little bit yesterday. What I did is I overlaid it on here. It does overlap like the previous snakes have done, and it's giving me the characteristics of that in that way where it overlays and overlaps. This is that snake and where it overlaps. This is where that snake would be taking over, basically, from here down, from if it were to divert from the one we've been using for the last 3 weeks. So I have them both overlaid on here. I'll give you one quick macro look at the new one, what it looks like. This is the new one, and what it looks like. It would create a macro double-double with a move up to the mid-sized time frame third pull. That's where it lines up. Double, double, and then move up. That's where I have it now. Again, don't know if the placement's correct. Don't even know if it's going to take over or if the one that we've been in for 3 weeks is going to continue to lead, which is this one that I have a hold of now. However, what I've done is I've laid them both on here, and it is going to tell us what it's going to do. And we're going to watch it. And the one that's been following for 3 weeks will be the bottom one. And the new one that just started on Monday, if it follows it, will be the top one within the, however, the next 2 weeks worth of movement here. We got 1, 2, 3 days: Wednesday, Tuesday, Monday. Wednesday. So by Friday, we should know. To be honest with you, by today or tomorrow, the end of today, tomorrow, we should know. It's going to make its move. The one that we've been following would require a hard downside move and for the last 3 weeks, and the new one would require maybe a potential move up, a break of the 1666 area, break and hold, followed by downside after that. So this is where you see the diversion the best. So that's what we're going to be looking at today and watching when it comes to AMC. At least that's what I'm going to be watching, which means that's what you're going to be watching. Then SPY. This is the original position of the 08-09 overlay that I've had for quite some time, since back in October, September, somewhere back in there. It's been replicating and showing movements since September in this overlay that I have clipped. This is the 1 hour. I think this was that movement there. And we're in the peak. We're in the move up to the peak right now, right? Got this, our zigzag. We got this movement here with the double top. There's the double top, top, down, in, top. Whoop, 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 whoop. Just like we got right there. The move down, like we got right there. The W here in the middle, what we got right there. And the start of the move up, which is where we're at, according to this. So I'm going to stick with this placement of it until it invalidates otherwise. And this is, again, the height and or depth of the moves is not represented here, right? It's not represented here at all. This is a directional overlay. It is to give insight as to what future projected movements may be. If you base trades off of this stuff and it doesn't work for you, that's on you. These are not predictions. These are overlays that can give some insight as to potentially where this thing may go. Nor do I make predictions. I think I've been very, very adamant about that on this channel. And I've stuck to it, and I refuse to do it. So that's SPY. GME. I think so, Flip. Yeah, probably. Is it at 10? That early? I'll have to get it queued up. GME sitting right on the third where it was yesterday. It may be in a grind up. If it is, it's got to break the neckline of 120. Get the move to the upside, just like AMC has to break its neckline around 1666, where I've had it for quite some time. If GME can break that, it's got room to move. If AMC can break it, it's got a little room to move. If it doesn't, it will reject. It will create its box top since it's riding right along the third pull. It should come back down in for a double-double if that were to happen. That's what we're waiting for on GME. And that's AMC, GME, and SPY for the morning. That would fill that gap, wouldn't it, if it did something like that? That would definitely fill that gap. Sure would. All right. Let's do 5 minute and 5 minute, I guess. There's we goes. Where's we goes? Thank you, Satari. Yeah, if y'all wouldn't mind smashing that like button, I appreciate the 101 of y'all that did. Thank you, thank you, thank you. Hey, Breeze. Thank you, man. Good morning, brother. How you doing? My live stream? Hey, Cajun Cutter, are you in here? Can't get in the live stream? Can you not get into the live stream? Question mark. And for future reference, please do not use that as the subject line. Period. I read all of my emails, brother. I got you. Period. No need to do that. Period. Did I not set the? I just set the chat for members only, right? That doesn't like, or for subscribers. That's just the chat. That's not 10-4, Peter. Yeah, Peter, I thought it was you. I thought so when you said who you were. That just sets the think T minus 20, 10, 11, 12 minutes. T minus 12 minutes, y'all. 12 minutes. Hey, Tim Whitmore, I'll move my charts however I feel like I need to move them. If you can't keep up with it, my friend, then go back to the drawing board. But no need to email me dumb shit like that. That's how this works, Tim. That's how technical analysis works. That's how overlays of fractals work. You move them where they need to be moved. You look at the placement of them and you make adjustments as you go. It's not a candle for candle projection. Just ignore it. If it's bothering you, ignore the overlay and use your own technical analysis and your own DD skills and figure out where you think it's going. All right, T minus 10. 10 minutes, y'all. 10 minutes. Yeah, I read your thing, Drake. I don't know what that is. I'll look into it after the stream, brother. I don't know why it's like that. I don't know if we have a limit of people that can all be in there at once, or not. I'm not sure. Not sure. No, I'm not Tony's Tube. I just don't take nobody's dumb shit. People are fucking rude to me. People come at my neck every fucking day. I'm not mean. I give back what's given to me by those. Those who give me respect, I give it back. Those who give me disrespect, I give it back. Isla, no, I didn't. Did you see Rico's tweet about you this morning? He said, you need a badass intro for your channel. No, I didn't see it. I didn't see it. I like Rico, though. Yeah, Tony, that's what Drake said, too, Tony. I don't know what's up with that. Okay, Gambit says, yes, in Discord, there's a limit on how many can view a live stream in there. Nitro might help with the limit, but you would need to look into it. Okay, I'll look into it. I'll look into it. Hey, Joe Pug, how you doing, brother? I didn't lock anybody out of chat. I made it subscribers only. So either you're a subscriber for 5 days, or I don't want to hear it in the chat. I'm tired of people coming in here and being like that. That was a request of everybody that's in here on a daily basis, so that's what I did. You're not locked out. You can watch the stream, and if you're not subscribed to the channel, then you can't chat. So that's the way it should be. That's the way it's going to be. It might even go all members. Everybody was requesting yesterday that I do members only. So we may have a monthly membership and do it like that if everybody wants that to happen. I walked away briefly, so I may 50 people to watch in the stream. Thank you, KK. So it's 50 people is the limit, is what I'm being told. Were there that many how many were in the powwow this morning? Thank you, Trev. You too, brother. Hey, Scott, appreciate it, brother. Thanks for the support, my friend. Nice, Chuck. That's smart. Remove all the stupid trolls. Yeah, it's subscribers only, and they have to be a subscriber for a minimum of 5 days right now. But like yesterday, y'all were saying, move it to membership, do like a $5 a month membership fee for the YouTube. That way only members can be in here. So Waddy, it has nothing to do, bro. Yeah, I know, brother. It has nothing to do. I'm not booting. It's not like that, bro. But I got to do what I got to do. You know what I mean? You're going to have an opportunity, though, because you're in there. So I'm putting together all of the details, and I'm going to be putting something out this week for everybody in Discord with all the details of what's going on and how we're going to do it. And you guys will all have first shot. So just hang tight. I'm getting everything worked out. I had the meeting last night. I got help this morning getting some of the notifications typed up for everybody, and as to what's going to happen and how it's going to go down. And yeah, just hang tight. Y'all are going to have an opportunity, though. Oh, shit. Chuck, my wife says I can't play hooky and watch you all day anymore. She's making me go back to work. I'll be in and out. I don't think she understands. She may have to go. Like those TikToks about the dog, the dog and the spouse. Which email, Satari? I don't know, brother. Which email? Just to get on the list, or did you send me a different one? Dude, I get literally hundreds a day. No joke, hundreds. I think I've already gotten 50 this morning. So I think I know I have one from you. I just can't remember what it is. I know I read one. Since I know you, I sleep better. Thank you. All right, Breeze. Good deal, man. Good deal, brother. I wish I could. Can I get to know you? Will it help me sleep better? I need to sleep better. That's actually a good idea. Members only. This is different from the Discord subscription. Yeah. Yeah. Do like just a $5 a month, members only, and then that way everybody in here is a member. And you know, people are the bot farms or whatever. If there are such a thing, they're not gonna pay $5 a month per thing to come in here. You know what I mean? Breeze, my nervous condition is completely cured by extreme gains. Aw, thank you, Isla. There's still correlate. I don't know, Josh. No. Looking for the box top bullish, dissolve, and bearish fractal images. Do you know where to find them online? They're not online. They're in the Discord. They're only in the Discord. Corey. Yeah, J-Paul. I know. J-Paul will put you to sleep. Oh, hey, let me cue that up. Fed speaks at 10, you all said? Let me get that queued up with these next 4 minutes here. And I got copywritten last time we did this. They gave me a copyright strike. They didn't say this is what it was for, but the day that I did this is the day I got the copyright strike. Fed live. Can somebody send me the link? So I don't have to look for this fucking thing. News and events, speeches, press releases, videos, speeches, AirPal. I don't know. Worth the $5 cover? I think so. Yeah, I mean, that's, you know, I think that's what everybody was saying yesterday, CWD. Everybody was like, just make a freaking thing, you know what I mean? $5, then it'll just, those people, we won't have to worry about them. They're not going to pay to come in here. Doesn't even say you're live. That doesn't surprise me, Don. Doesn't surprise me, brother. Get those in the chat. Oh, yeah. We're about to open up. Less than a minute. Let's light that chat up with the opening bells. Pete, if you're in here, get us started for the trading day. Y'all can light that chat up with bells. Can somebody in Discord DM me the link for the Fed meeting or the Fed speak and for 10 o'clock? So I don't have to look for, I'm trying to look for it and pay attention to everything. Oh, wait. No, that's January. I'd appreciate it. Yeah, we'll get this thing cracking. We'll get it opened up and going. There we go. There's some bells coming in early. You guys are ready today, man. Y'all are ready today. Ooh, flush. Look at that. Right before the bell, AMC is flushing hard. There it goes. Bounce back. We are open. Ding, 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 ding. We are open. Thank you, Tony. Thank you, Drake. Give me a few minutes, audio listeners, and I will get you caught up here. Let me get this link plugged in. That says January 26th. Yeah, I have the events. I was on there, but put this one in here. Videos. Yeah, the only thing showing up is January 26th. Nothing for no scheduled live or nothing on the YouTube channel. Playlist. Yeah, I'm not finding anything either. What y'all sent me was what Tony, you sent me was the January 26th last speech, unless they're just gonna come on there again. But then and then Drake, the YouTube channel, doesn't have any things set up for the live right now. All right. All right, there we go. So we had a turnaround. I don't know. I can't fucking find it. I want to see what's going on. AMC's up 3.2%. GME's up 3.4%. SPY's up 0.83%. SPY's up 1%. IWM is up 1.3%. Everything's pushing hard. Hard push. What's the volume look like? $2 million. 4 minutes. Pretty heavy push for $1 million. But it's going to finish out. We'll see if it finishes its fractal out. It does. I found it again. Wouldn't let me see anything. Just a bunch of, okay. Read that. SEC meeting, not Fed meeting. Oh, mercy. AMC's up 4.4%. GME up 3%. GME's right under the 120 rejection I was talking about. AMC's trading at $17.15. I don't give a fuck. I'm not going to try to do this and miss out. I don't give a shit. Can somebody just send me a link to it if one of y'all have it or you know where it's at, or where I can find it? Send me a link. If not, I'm not gonna try to look for it while we're moving. I want to pay attention as well. Corey, I don't know. Everybody said today at 10 a.m., man. That's just what I was told, so I have no idea, man. I asked this morning, and they said, yep, 10 a.m. I was just at that link, Drake. There it is. Thank you, Drake. Well, no, it's not. Well, it says open meeting. Oh, Sunshine Act. Okay. Is that it? Thanks. Meeting will be webcast on the commission's website at sec.gov. Okay. It was just that reroutes you. AMC's up 5.2, GME's up 5.7. And there they get the hit. Just fucking reroutes you. It's ridiculous. We'll check back at 10. Check back in 20 minutes. AMC GME were both up 5. They just got knocked back 0.5%. BBIG's up 4.6. FI's up 1.08. IWM is up 1.2. 1.2. Thank you, Penny. I have it up. I have the page up. Come back up. Come back up, Peloton. There's my flush down on PayPal. Let's go. PayPal's about to trigger. Let's go. Come on, PayPal. Do what you're told again. No, do what you're told again. Gap fill. Coming down to fill this gap. And it's going to go. Come on, baby. AMC's up 5.2. GME's up 3.86. GME got smacked real quick at the 120, like I was talking about. It broke it. It's sitting just above it. Got smacked at 123 exactly. AMC just made another run at 5%. It's sitting right at 5% at $17.25. What do we got? Everything's green. What's red? That on that CFVI. I don't give a shit about that. All right. Eton, I think, took off without me. That's all right. Come on, PayPal. Yeah, GME's getting smacked. Back down to 118. From 123 to 118. See if it'll make a second run at 120. If not, I expect to see that as the rejection, like I've been talking about for weeks, to fulfill that potential double-double and or the check down or check up on the way down. Or if it can claim 120, break and hold, confirmation continuation, it's got room to run to the upside again, like we've been looking at and talking about for weeks. AMC's doing well, up 6%. $6.4%. Come on, Jimmy. What the fuck are you doing? That fucking 120. I knew it, man. I wanted to see a break and hold of that. But it has that third to fulfill. It's got a box top. Got a box top. All right, all right, all right. Audio listeners, almost quarter till update. AMC's up 5.5%, 1734. GME's up 2.8% at 118.60. BBIG's up 2.8 at 310. SPY's up 1.13. IWM is up 1.38. Threw my first box top on Peloton and hit it perfect. Old dog, new tricks here. Let's go, Peter. Hell yeah. Hell yeah. Let's go. Let's go. Let's go. Let's go. I spy. I spy a repeat of history. It's been going and going, going, going. It's a repeat of history. Man, we got 400 people in here and 188 likes. Y'all are awesome, man. The 188 of you are fucking awesome. Thank y'all. Appreciate y'all, man. Really, really do. I mean that. I do. 415 people. 188 likes. I appreciate y'all. Appreciate y'all. Y'all. I appreciate y'all. Just y'all. That's it. That's it. Ooh, 237. I appreciate 237 now. 246. I appreciate you. Can I get 246? 246. 246. Can I get 246? 251. We got a bidder at 251. Can I get 255? 255, 255. We're at 251. Can I get 257? We got a bidder at 257. Can I get 260? 260. Got 257. Can I get 262? Got 262. Can I get 265? 265. We got 263. We'll take 263. Y'all are funny. 269. Don't like nobody else like. No, I'm kidding. 271. 271. All right. How we doing, Chuck? Keep coming back to your channel. Stay the way you are. Seeing others change. Realness is where it's at. Thank you, Double X. Appreciate that. Appreciate that. Yeah, bro, I'm too old to change, man. I'm too old and too stupid to change. You know what I mean? I am what I am. In the news, in the paper, every day I am. That's just the way I am. Gonna learn today. All right. You want to see Piton. Piton took off. Piton took its third and took off. It ain't messing around. See if it gets a bounce back up. It's at its bounce zone right now. If it gets that bounce back up to retest the box top, or if it's gone, we'll see what happens. I was hoping for a bounce back up to test that box top before it did what it's doing, so it may have already taken off running from me, from my levels anyways. If any of y'all had in a little more risky, lower levels, you would have got in on a good one. Mine was a little higher. I thought it was going to triple top. It still might, but right now it's not. The Piton's down 3.57. It was up 20-something% yesterday, so. All right, AMC is on its way back down for the time being from 6% to 3.4. A high of 1750. Oh. Yep, 1750. GME broke 120 up to 123, pulled back, sitting back at 117 right now. From 180 to 278 real quick, yeah. And we got a little bit. We got 283. I'm stoned. So save that for lunch, man. No, it's all good. Here comes the flush. GME is back down to up 1%. AMC is at 2.75%. Pretty. Damn it. Good morning, Semp. What's up, brother? Good, Chuck. Good morning. Got the phone the phone 80-inch Samsung and laptop on Extreme Gains. Yes, 3 likes for me. Thank you, good sir. Semper, thank you, my brother. I appreciate you, man. I appreciate you. Thank you, thank you, thank you. Minus 30. Minus 33, actually. 33 to be exact. Minus 33. We're missing 100 likes, y'all. We're missing 100 likes. We had 400. We got 380. We have 280 likes. 100 of y'all don't like it here, so I appreciate the views, though. You know what I mean? Thank you for being here. Thank you for viewing it, even though you don't like it, and putting yourself through that small hell this morning by spending some time with me. I appreciate that. Good morning, Jen. Middle America now is a tragedy. It's so sad to see an upper class, to see having this happen. Thank you. Thank you. They get paid by hedge funds to watch me. What's up, Rip? What's happening, man? And I missed my... That's up. Knew I was gonna... News. Webcast. Still running me in circles. Sounds like the snare in the way I am. Oh yeah. Yeah, it does. It does, actually. Let's grab some 255 spot puts, hoping to see some hesitancy, and then downside leading up to and after Fed meeting this afternoon. But so wait a minute, is there the SEC thing today and a Fed meeting? Y'all confuse me, man. Are there both today? GME had to hit the 120 as you so correctly projected, Chuck. AMC is so inextricably linked ETFs with GME that it has to go along with the same ride. Yeah. Thank you, JP. Thanks, brother. Thanks for seeing it, bro. Thank you. I missed my swing. I missed a swing this morning that I could have taken, and I missed it. I was trying to... Never mind. Yeah, that 120 I've been talking about for weeks, man. For weeks. We'll see if it fulfills on macro, JP, but I knew the rejection at 120 was going to happen. This is why I use the tops of those W's, bro. Anybody else that gives a shit. That's why I use the top of the W's, for this reason. It's a, whether you want to call it a neckline break, right? We have the inverted head and shoulders here. Or just in general, if it's going to be the macro double. I use that neckline break. I've been calling a 120 rejection for weeks now, leading up to it. So it's there. It happened. We'll see if macro follows. If we get definitive continuation, then we'll see macro start to follow. So that should be good. Sorry, not Fed meeting. Yeah, I was going to say, y'all confusing me, man. Fed meeting, SEC meeting, had me on the Fed page, and then the fucking YouTube, and now back to the same page I was at in the first place. And then it was like SEC. Now it's Fed. All right. Like, what is it? Somebody tell me what the fuck it is. Missed an opportunity to swing $1,000 again. Let me see if it's up yet. I don't know. It's run. It's 3 minutes till, and it's still not up. Raymond, my mom works for the Postal Service. She's worked there for years. Don't say that, Drake. You might get eaten alive. Everybody thinks that this is going to be the ignition to MOAS. Might get your face taken off. Open meeting? I'm on the page, man. I'm going to webcast. Sunshine Act, open meeting. Open meeting Wednesday, January 26th. It doesn't come up then when you click open meeting. Past webcast. I don't want that. I don't. Sunshine Act notice. It says click here. It will be. So fucking frustrating. News. Done. Events. Error. Page not found. Page not found. How about go to upcoming events? Right? Upcoming events. Then open meeting. Here we go. It wouldn't let the link go through without going through the process of clicking that. I don't know. I guess just put it here, huh? I guess. I got it, but you can't. I got it. You can't type in the fucking link that you sent me and it take you there. You have to go click upcoming events first and then open meeting. You can't just put that link in. I tried it and it said error. I'm there. I got it. There. Watch it wherever you want to watch it. Did PayPal go? Did it make it back up? Oh. Yepper, gap fill, go, trigger, let's go. Just like I fucking said. Let's go. Came back down, filled that fucking gap perfectly. Upside move, let's go. 122.50 first price target. After that,
Good morning. This is an open meeting of the U.S. Securities and Exchange Commission on February 9th, 2020.
Oh, this fucking bitch
I want to
again.
welcome members of the public who are listening in. Today, the Commission will consider 3 recommendations from staff on proposed rules. First, we will consider whether to propose rules and amendments under the Advisors Act for private fund advisors and whether to propose amendments to the compliance rule under the Advisors Act. Second, we will consider whether to propose new rules to address cybersecurity risk management for registered investment advisors and investment companies, as well as related amendments to certain rules regarding advisor and fund disclosures under the Investment Advisors Act and the related Investment Company Act. And then third, we will consider whether to propose rules and rule amendments under the Securities Exchange Act to reduce risk in the clearing and settling process for securities. This would be including by shortening the standard settlement cycle for most broker-dealer transactions and securities to 1 day, which is sometimes called T+1. The proposed rules and rule amendments would be applicable to broker-dealers and certain clearing agencies. We'll also consider whether to propose rule amendments under the Investment Advisors Act to require investment advisors to maintain certain related records to this clearing and settling. I'm pleased to support all 3 of these items and look forward to today's presentation. Before we begin, I'd like to take a moment to welcome William Berthistle, the new director of the Division of Investment Management, to the Commission and to the first open meeting he has been able to participate as Division Director. I will now turn it over to William to introduce our first item for consideration. I think William's also going to be doing the second item, but new rules and amendments on the Investment Advisors Act to enhance the regulation of private fund advisors as well as an amendment to the Advisors Act compliance rule. With that, William.
Thank you very much. Good morning. Chair Gensler and Commissioners Peirce, Lee, and Crenshaw. Today, the Division of Investment Management recommends proposing new rules and amendments under the Investment Advisors Act of 1940 to enhance the regulation of private fund advisors. In addition, the division recommends amending the compliance rule under the Advisors Act in order to assist our examination staff and enhance investor protection more generally. I'm honored to participate in the first open meeting I've been able to attend as division director. I've been extremely impressed by the staff's professionalism and commitment to the agency's mission, particularly in these extraordinarily challenging times. While drafting this proposal and others, the division staff have worked tirelessly to brief me on a broad array of issues that impact the investments of millions of Americans. I thank each of those dedicated public servants, and I'm privileged to join them in this important work. Private funds and their advisors play an important role in both private and public capital markets. These funds, including hedge funds, private equity funds, and venture capital funds, currently have approximately $18 trillion in gross assets. Private funds invest in large and small businesses and use strategies that range from long-term investments in equity to rapid trading and investments in complex instruments. Their investors include individuals, institutions, governmental and private pension funds, and nonprofit organizations. The economic activity of private funds is significant both to large portions of the capital markets, the businesses that raise capital from private funds, and to many individual American investors. Following the great financial crisis, Congress passed the Dodd-Frank Act, which increased the Commission's responsibility for overseeing private fund advisors. In the past decade of overseeing most private fund advisors, the staff has examined these advisors to assess the risks presented by their business models. The Commission has also pursued enforcement actions against private fund advisors for practices that have caused private funds to pay more in fees and expenses than they should have, negatively affecting returns for private fund investors. Other actions against private fund advisors stem from their failure to disclose relevant conflicts of interest concerning the private fund advisor and the fund. Despite our examination and enforcement efforts, private fund investors do not receive sufficient transparency regarding the full cost of investing in private funds, the performance of such private funds, and conflicts of interest. Our recommendations today are not requiring advisors to disclose private funds holdings or strategies publicly, but rather are focused on increasing transparency about the fund's fees and performance to their investors. In addition, private fund advisors engage in a number of practices that are contrary to the public interest and protection of investors, particularly related to fees, expenses, and certain other conflicts of interest. We recommend that you propose to prohibit or restrict these activities. We believe they give advisors an incentive to place the advisor's interests ahead of their clients, and by extension, their investors, and can result in private funds and their investors bearing an unfair proportion of fees and expenses. I will now invite my colleague, Christine Schleppergrell, from the Division of Investment Management, to describe the recommendations in more detail.
Thank you, William. Our proposal recommends that the Commission propose 5 new rules under the Investment Advisors Act 1940. Two rules under that act. First, the proposal includes a new rule that would require registered private fund advisors to distribute a quarterly statement to private fund investors. The quarterly statement would disclose certain information regarding the cost of investing in the private fund and the private fund's performance. For example, the statement would include a detailed accounting of all fees and expenses paid by the private fund during the reporting period, and fees and expenses paid by underlying portfolio companies to the advisor and its related persons. Also, the statement would include performance information based on standardized metrics that are tailored to whether the advisor classifies the fund as a liquid or liquid fund. This proposed rule is designed to assist investors in assessing, monitoring, and comparing their private fund investments. Second, the proposal includes a new rule that would require registered private fund advisors to obtain annual financial statement audits for the private funds they advise and require the audited financial statements to be delivered to investors. The proposal would require an independent public accountant that meets certain independent standards to perform the audit. The proposed new rule would help protect the private fund and its investors from the misappropriation of fund assets and also provide an important check on the advisor's valuation of private fund assets. Third, the proposal includes a new rule that would require registered private fund advisors to obtain a fairness opinion from an independent opinion provider in connection with advisor-led secondary transactions to ensure that private fund investors are offered a fair price. In an advisor-led secondary transaction, advisors offer existing fund investors the option to sell or exchange their interests in the private fund for interest in another vehicle advised by the advisor or any of its related persons. Also, the proposal would require registered private fund advisors to prepare and distribute to the private fund investors a summary of any material business relationships the advisor or any of its related persons has had within the past 2 years with the independent opinion provider. The proposal would require advisors to distribute the opinion and written summary to investors prior to the closing of the transaction. The proposed new rule is designed to address conflicts of interest that arise in these transactions because the advisor and its related persons typically are involved on both sides of the transaction and have interests in the transaction that are different than or in addition to the interests of investors. Fourth, the proposal includes a new rule that would prohibit all private fund advisors from engaging in certain activities and practices that are contrary to the public interest and the protection of investors. The proposed new rule is designed to address conflicts of interest that could reasonably lead to fraud and investor harm because they incentivize advisors to place their interests first. In our experience, such conflicts cannot be managed through disclosure alone. The proposed new rule would prohibit an advisor from charging certain fees and expenses to a private fund or portfolio investment. Specifically, the proposed new rule would prohibit advisors from charging fees for unperformed services, fees associated with an examination or investigation of the advisor, fees for the advisor's regulatory or compliance costs, and fees related to a portfolio investment that are allocated on a non-pro rata basis. In addition, the proposed rule would prohibit an advisor from reducing the amount of any advisor clawback by the amount of certain taxes, would prohibit an advisor from seeking reimbursement, indemnification, exculpation, or limitation of its liability for certain activity, and would prohibit an advisor from borrowing or receiving an extension of credit from a private fund client. Fifth, the proposal includes a new rule that would prohibit all private fund advisors from providing preferential terms to certain investors regarding redemption rights and information about portfolio holdings or exposures. Also, the proposed new rule would prohibit advisors from providing any other preferential treatment to private fund investors unless advisors disclose such treatment. The proposed new rule is designed to protect investors by preventing advisors from providing special redemption rights and transparency into fund holdings when these terms can have a material negative effect on other investors. Sixth, the proposed amendments to the Books and Records Rule under the Advisors Act would require registered private fund advisors to retain copies and records related to the proposed new rules. These proposed amendments are designed to help facilitate the Commission's inspection and enforcement capabilities. Seventh, the proposed amendments to the Compliance Rule under the Advisors Act would require all SEC registered advisors, including those that do not manage private funds, to document their annual review in writing. The proposed amendments are designed to help examination staff understand an advisor's compliance program, identify potential weaknesses in the compliance program, and determine whether the advisor is complying with the rule. Thank you for considering our recommendation. I will now turn it over to Jessica Wachter, Director of the Division of Economic and Risk Analysis, who will discuss the economic impact of the recommendation.
Thank you, Christine, and good morning, Chair Gensler and commissioners. Today, the Commission is considering proposing new rules and amendments under the Investment Advisors Act regarding the disclosures and business practices of private fund advisors. Private fund advisors oversee assets totaling in the tens of trillions of dollars. Assets under management have grown over time. In particular, the assets under management of registered private equity advisors have approximately doubled over the past 5-year period. Private fund advisors are thus important intermediaries between investors and companies seeking to raise capital. The relationship between a fund advisor and investors is at the core of modern finance. Investors trust their fund advisors to manage money on their behalf. Several problems appear present as we examine this relationship in the context of private funds. First, investors have limited access to information about fees and performance. These problems are compounded to the extent that certain funds have liquid investments that may be difficult to independently value. Second, sales and compensation practices and certain agreements speak to a misalignment of incentives between advisors and funds. The proposals considered here today would bring greater transparency to fees, expenses, and returns so that investors could gain greater insight into the costs of the funds and to fund performance. The proposal would also prohibit certain sales and compensation practices in preferential terms. For example, advisors would be prohibited from using fund expenses to pay fees associated with an investigation of the advisor. Advisors would be prohibited from borrowing from a fund. Both practices may create adverse incentives for risk-taking. Advisors would not be able to give preferential information regarding portfolio holdings or exposure, nor would they be able to allow some investors to redeem at times when others cannot. By bringing greater uniformity to the information provided to investors and by moving towards less opaque and complex compensation arrangements, we believe these proposals will drive efficiency for private advisors, funds, and even issuers. This may ultimately encourage capital formation. There may be costs associated with these proposals, including the cost of obtaining an audit and the cost of disseminating information. Compensation practices and preferential terms may serve an economic function which may no longer be available. We have carefully considered these costs in developing this proposal. In closing, I thank our colleagues from the Division of Investment Management, the Division of Exams, the Office of the Chief Accountant, and the Office of General Counsel for their collaboration, and I thank you for your attention.
Thank you both for all the presentations, William, Christine, and Jessica, and so Commissioner Peirce.
Thank you, Mr. Chair, and thanks to Christine, Jessica, and William. William, I'm sorry that for your first rule at your first meeting, I will not be able to support it. Today's proposal represents a sea change. It embodies a belief that many sophisticated institutions and high net worth individuals are not competent or assertive enough to obtain and analyze the information they need to make good investment decisions or to structure appropriately their relationships with private funds. Therefore, the Commission judges it wise to divert resources from the protection of retail investors to safeguard these wealthy investors who are represented by sophisticated, experienced investment professionals. I disagree with both assessments. These well-heeled, well-represented investors are able to fend for themselves, and our resources are better spent on retail investor protection. Accordingly, I'm voting no on today's proposal. As you've heard already, if finalized, the proposal will impose a host of new mandates on private fund advisors. Among other things, registered private fund advisors would have to provide investors detailed, standardized quarterly information on fees, expenses, and performance, including data on portfolio investment compensation, to obtain annual financial statement audits by a public company accounting oversight board registered auditor, and to document in writing their annual compliance reviews. The proposal would require registered private fund advisors to provide investors with an independent fairness opinion for any advisor-led secondary transaction. Further, the proposal would prohibit all private fund advisors, even those not registered with the Commission, from directly or indirectly engaging in certain sales practices, conflicts of interest, and compensation schemes including charging certain types of fees and expenses to a private fund or portfolio investment, allocating certain fees and expenses in a non-pro rata fashion, and providing certain types of preferential treatment. These changes represent a meaningful recasting of the SEC's mission. First, the proposals focus on protecting private fund investors by shaking information loose from what we deem to be uncommunicative private funds and shutting down practices we deem to be unfair is a departure from the Commission's historical view that these types of investors can fend for themselves. As we reiterated when we proposed a modest expansion of the scope of the accredited investor subset of sophisticated investors 2 years ago, we have justified setting accredited investors apart from their retail compatriots because we deem the former able to, quote, gain access to information about an issuer or about any investment opportunity or to bear the risk of a loss. I personally have never found the sophistication narrative a compelling rationale for keeping unaccredited investors out of the private markets. And maybe a silver lining of today's rules is that it signals a new belief that all investments should be open to all investors. After all, with this proposal, which affords retail-like protections to accredited investors, this commission is publicly calling into question the rationale for dividing retail from accredited investors. Second, and related, the commission undoubtedly will devote examination and enforcement resources to ensure that private fund advisors adhere to their new prescriptions. We're not blessed with unlimited resources, and each year we make difficult decisions about how to expand or examine enforcement energies. Not surprisingly, the Commission historically has placed retail investor protection near the top of the list of agency priorities, even after the Dodd-Frank Act's private fund registration mandate. If we adopt today's proposal, will we choose to redeploy exam and enforcement resources away from their current focus on retail investor protection, the apparently pressing need of protecting millionaire investors from private fund advisors? Third, the application of new prohibitions on private fund advisors that are exempt from registering with us takes another step toward erasing any distinction afforded by the exemption from registration. Commissioner Troy Paredes foresaw this problem in 2011 when the Commission imposed mandatory public disclosure requirements on venture capital funds. He was concerned, quote, that the Commission is shaping a regulatory regime that ultimately will come at the expense of capital formation, innovation, entrepreneurism, and jobs. As the VC fund industry is required to bear more regulatory burdens and demands, the risk is that capital formation will be unduly hindered. This proposal, if finalized, could hinder capital formation. I do offer my thanks to the staff of the Divisions of Investment Management and Economic and Risk Analysis and the offices of the Chief Accountant and General Counsel. Although I'm unable to support today's proposal, I appreciate all of the work and effort that staff put into this well-written proposal and the time that you took to discuss it with me. I look forward to hearing from commenters about whether my concerns about this are justified in this place. Thank you.
Thank you, Commissioner Peirce. Commissioner Lee.
Thank you, Chair. Transparency, protection against conflicts of interest, and accountability. These are cornerstones of investor protection in all markets and for all investors. So I'm pleased to support today's proposal, which seeks to achieve these goals in the private fund space in a thoughtful and well-informed manner. With over 5,000 registered private fund advisors managing over 18 trillion in private fund assets, as we heard earlier, this growing segment of the market has a significant impact on investors, on capital markets, and on our economy. Now, as noted in the release, the staff now has a decade of oversight under its belt, and it brings that depth of experience and expertise to bear in proposing a number of important reforms. Today's proposed rules address informational gaps and asymmetries, as well as inherent conflicts of interest that can harm investors and markets. And in considering this proposal, I think it's critical to note the large and growing presence of retail investors, and particularly those with retirement assets exposed to this market. For example, U.S. pension funds hold roughly $480 billion in private equity investments, representing an average of about 9% of their holdings. And what's more, so-called crossover investments or investors, such as mutual funds with numerous retail investors, are steadily increasing their participation in these markets. So I'm pleased with the thoughtful approach that today's proposal takes, and I look forward to public comment on all of the proposed changes. I will only highlight a few of the most significant potential improvements here. One key reform is a proposed requirement for registered fund advisors to provide a quarterly statement containing critical information about the fund's fees and expenses at both the fund and portfolio investment level. I think this detailed, simple, and clear information will give both retail and institutional investors alike standardized cost information in a straightforward and digestible tabular format. The information should facilitate reasoned, well-informed decisions by investors who may, in certain circumstances, otherwise be at a disadvantage vis-a-vis the advisor or other investors. And as we've said before, with respect to registered funds, the Commission has a strongly held belief that fees and expenses are centrally important to investment decision-making. And that principle holds true for private fund investors as well, because informed decision-making by all investors is paramount to efficient capital allocation and well-functioning markets. A second key area of reform relates to protection from certain conflicts of interest. For example, the proposal would prohibit a private fund advisor, whether registered or not, from granting preferential redemption terms to one or a subset of investors. And that practice can lead to significant dilution for those without preference. Also, private fund advisors would be required to disclose other forms of preferential treatment to all investors, because preferential treatment coupled with a lack of transparency can severely inhibit a party's bargaining ability and power, essentially leading investors to bargain in the dark. Lack of transparency inhibits the ability to make an informed decision about investments, which can impact returns and result in misallocation of capital and other market inefficiencies. In sum, these proposed protections related to conflicts represent the collective wisdom of the staff after years of monitoring this space and observing the costly financial impact that these conflicts can create. I have full confidence in their assessment. And finally, this proposal requires and promotes accountability among certain private fund advisors in a number of ways. Among the most prominent is the requirement to obtain a financial statement audit performed by an independent public accountant that is registered with the PCAOB. As stated in the release, our experience has shown that audits provide meaningful protection against misleading information and misrepresentations of important metrics such as fees, performance, and other items. This provides a crucial safeguard for the accuracy of an advisor's representations. The practical effect of the proposed rules is to help bring efficiency and fairness to this market through transparency, addressing conflicts, and creating accountability. So I want to thank the staff in the Division of Investment Management and echo the chair's warm welcome to Director Birdthistle. I also want to thank the staff in examinations, economic risk and analysis, and the Office of the General Counsel. All of you together have produced a well-considered, meaningful, and balanced regulatory framework, and I'm happy to support the proposal. Thank you.
Thank you, Commissioner Lee. Commissioner Crenshaw.
Thank you, Chair Gensler. Investment advisors are their clients' fiduciaries. This means that investment advisors are legally obligated to serve their clients' best interest. This standard of conduct is not an aspirational goal. It must be meaningful and offer the real protections investors reasonably expect and deserve. And this standard of conduct is not limited to the conduct of an advisor's relationship with retail clients or registered funds. Private fund investors, including such entities as pension funds, charitable organizations, college endowments, rely on the protections afforded by the Advisors Act and benefit from advisors' obligations to place their clients' interest first. In order to ensure the fiduciary standard of conduct delivers these protections, we must carefully consider whether the current rules are the right ones. Today's release assesses and then proposes reforms to the markets in which private fund advisors operate. These markets are often opaque and present a variety of investor protection concerns. Through the work of the Division of Exams, the Commission has identified, among other things, many concerning examples of private fund advisors' conflicts of interest, inconsistent disclosures, and improper allocations of fees and expenses. Such practices can result in harm to investors, and the rules that the Commission proposes today include several provisions to better align advisors' disclosures and conduct with their clients' best interest. To that end, The release proposes specific and detailed disclosures about fees and expenses, advisor compensation, how private fund performance is calculated, and the preferential terms granted to some, but not all, investors. This additional information should help private fund investors better assess the advisor's performance and decide whether to remain invested in a particular private fund, how to invest other assets, and whether to invest in private funds managed by the same advisor in the future. And after a decade of oversight of private fund advisors, it seems requiring better disclosure alone is not adequately protect investors. For example, we've seen private fund advisors structure deals to benefit advisors at the expense of the private fund and its investors, charge fees for services the advisor never intends to provide, obtain reimbursement from clients for expenses that don't directly relate to the activities of the private fund, and attempt to convince investors that they have fewer rights and avenues for redress in the event of advisor misconduct than the law actually provides. Such practices unfairly enrich advisors by putting their interests ahead of the fund and its investors. And the private fund investors often have little or no meaningful opportunity to identify or address this conduct. Given the evidence that many private fund investors lack sufficient bargaining power to demand greater protections and to have their interests placed first, disclosures alone don't appear to be sufficient. And the Commission should help ensure all investors are getting the protections that they need. I believe this proposal is a meaningful step in promoting the best interest of private fund investors. Thank you to the Chair, the Chair's Council, to my fellow Commissioners and their staff, the staff in the Division of Investment Management, the Division of Exams, the Office of the General Counsel, the Division of Economic and Risk Analysis, and of course, a warm welcome to Director Bert Thistle. And thank you all for your thoughtful work to advance today's proposed rule, and I look forward to reviewing the comment letters.
Thank you, Commissioner Crenshaw. Thank you, all commissioners. And today, this commission is considering rules and amendments, as we've talked about, to the Investment Advisors Act to improve efficiency, competition, and transparency. Efficiency, competition, and transparency at the heart of our three-part mission. And it's around the activities of private funds advisors. I support the proposal because if adopted, it would help investors in private funds on the one hand, but also the companies raising capital from these funds on the other hand, two of the really fundamental parts of our three-part mission. Now, why do private funds matter? First, they matter because they're large and they're growing in size, complexity, and number. These funds, including hedge funds, private equity funds, venture capital funds, liquidity funds, currently have approximately $18 trillion in gross assets. But beyond the size itself, these funds matter because of what or who stands on either side of them. The funds pool money of other people, the limited partners. But who are these limited partners? Well, sometimes they are wealthy individuals, as other commissioners have said, but often, though, they're retirement plans like state government pension plans or nonprofit and university endowments. And the people behind those pension funds and endowments often are teachers, firefighters, municipal workers, students, and professors. And now, who are the people on the other side of the private funds? They're entrepreneurs. They're trying to turn big ideas into big companies. They're small business owners looking to hire employees, invest in new technologies, and grow. They're the managers of late-stage companies as well, bought and sold by private equity firms. Private fund advisors, through the funds they manage, touch so many parts of our economy. Thus, it's worth asking whether we can promote efficiency, competition, and transparency in this field as our mission lays out. This proposal is designed to do a number of things. You've heard it reviewed. I'll hit a couple of them as well. First, it would increase transparency, would provide comparability to fund investors on a quarterly basis around the three items of fees. These are not just management fees and performance fees, but the investment fees that the fund or the fund's affiliates pulling off the portfolio companies. It's about expenses and performance metrics. That being said, increasing transparency by private fund advisors with respect to fees, expenses, performance metrics, as important as that is not enough to protect investors. Thus, secondly, the proposal also would prohibit private fund advisors from engaging in a number of activities that are contrary to the public interest and the protection of investors. For example, the proposal would prohibit, as you've heard, seeking reimbursement, indemnification, exculpation, or limitation of its liability for certain activities, such as a breach of fiduciary duty in providing services to private funds. Charging certain fees and expenses to a private fund or its portfolio company, such as accelerating monitoring fees or fees associated with an examination or investigation of the advisor, or granting preferential treatment for certain investors regarding redemption information about portfolio holdings or exposures. Third, other preferential treatment, as typically granted in side letters, would be allowed, but only if there's disclosure to prospective investors and existing investors, so that investors understand these preferential treatments. Fourth, the proposal also would require annual audit. As been mentioned, audits would provide important review of the advisor's valuation of private fund assets, which often serve as a basis for calculating fees. And fifth, the proposal would require registered private fund advisors to obtain a fairness opinion from an independent opinion provider in connection with specific kinds of transaction. In essence, where an advisor may stand to profit at the expense of private funded investors. It provide an important check against the advisor's potential conflicts of interest in structuring and leading such advisor-led so-called secondary transactions. And finally, the release proposes amendments to investors' obligation with respect to books and records and compliance. Now, I'm pleased to support today's proposal, subject to commission approval. Look forward to the public's feedback. I'd like to thank members of the SEC staff who worked on this rule, including William Birthistle, and William's dad might be watching. He too has the same name. Sarah Ten-Seekoff, Melissa Gaynor, Melissa Harkey, Michael Noose, Mark Maris Pond, Christine, who we heard from earlier, Thomas Strumpeth, Alex Bradford, Tim Delaney, Trevor Tatum, and the Division of Investment Management. The Office of General Counsel, Meredith Mitchell, Marie Louise Booth, Natalie Shioji, Robert Bagnall, and Amy Scully, and Dan Berkowitz. From the Division of Economic Risk Analysis, we heard from Jessica, but also Russ Shuke Z, Alexander Schilla, Cindy Alexander, and Charles Woodworth. And then from the Division of Exams and Division of Enforcement, Dan Kyle, Christopher Mulligan, and Daniel Fagus, that's from Exams, and Adam Atherton and Dabney Oredin from Enforcement, and also from the Chief Accountant's Office, Natalie Martin, Ahmed Harif, Anita Dout, Kevin Vaughn, and Aaron Nelson. Not to leave anyone out, Office of International Affairs, Paul Gumage, Kathleen Hutchinson, Elizabeth Jacobs, and Morgan McDonald. I also want to thank Jenny Songer, who's in the chair's office now, but helped work on this when she was in the Division of Investment Management. How do commissioners vote on whether to approve the division's recommendations as presented?
No.
Yes.
Yes.
Yes, the recommendation is approved by a vote of 3-1. So I turn it over to Vanessa to send off to the Federal Register. I would also note for the public in this rule and the other rules we're considering today that the comment files will be open as soon as we put this on our public website, hopefully in the next 24 hours, for a period of not less than 60 days from when it goes on our public website, or 30 days from the time it's in the Federal Register. We had some conversation about that amongst commissioners, and I think this gives more certainty that it's at least 60 days from when it's on our website, or the later of 30 days when it gets in the Federal Register. It sometimes takes a while to get in the Federal Register. Next up, we have some new rules to consider on cybersecurity risk management for registered investment advisors and investment companies, as well as related amendments regarding advisor and fund disclosure. So I'll turn it back to you, William, and the Division of Investment Management.
Thank you again. Chair Gensler and Commissioners Peirce, Lee, and Crenshaw. Today, the Division of Investment Management recommends new rules and amendments designed to improve cybersecurity risk management for investment advisors, registered investment companies, and business development companies. Advisors and funds play an important role in our financial markets and increasingly depend on technology for critical business operations. They face numerous cybersecurity risks and may experience cybersecurity incidents, which could cause significant financial, operational, legal, and reputational harm. We are therefore recommending for proposal a set of comprehensive reforms to address how advisors and funds mitigate and disclose cybersecurity risks, to enhance advisor and fund disclosure of cybersecurity incidents, and to require advisors and funds to report significant cybersecurity incidents to the Commission. Today, there are no Commission rules that explicitly require firms to adopt and implement comprehensive cybersecurity programs. Based on staff examinations, we're concerned that not all registered funds and advisors have adopted and implemented reasonably designed cybersecurity programs. We are also concerned about advisors and funds' disclosures to clients and shareholders concerning cybersecurity risks and incidents. While many firms already provide disclosure about cybersecurity risks, we're concerned that clients and investors may not be receiving cybersecurity-related information, particularly with respect to cybersecurity incidents, that is sufficient to help ensure they are making informed decisions when choosing or deciding to stay with an advisor or fund. In addition, today advisors and funds do not have to report significant cybersecurity incidents to the Commission. This reporting would also allow us to better understand the nature and extent of cybersecurity incidents occurring at advisors and funds, how firms respond to these incidents to protect clients and investors, and how cybersecurity incidents impact the financial markets more generally. These concerns motivate today's proposal. I will now turn to Thomas Strumpf from the Division of Investment Management, who will describe the recommended proposal.
Thank you, William. Our recommended cybersecurity risk management framework includes several key components that are designed to better protect clients and investors from cybersecurity risks. First, the proposal would require all advisors and funds to adopt and implement reasonably designed cybersecurity policies and procedures containing certain elements. Under new Rule 2064-9 under the Advisors Act and 38A2 under the Investment Company Act. While these new rules would allow firms to tailor their cybersecurity policies and procedures to fit the nature and scope of their business and address their individual cybersecurity risks, they must, at a minimum, include the following elements: a risk assessment to understand the cybersecurity risk facing the advisor or fund and its service providers. User security and access to implement controls designed to minimize user-related risks and help prevent the unauthorized access to information and systems. Information protection to monitor information systems and protect information from unauthorized access or use based on a periodic assessment of their information systems and the information that resides on the systems. Threat and vulnerability management to detect, mitigate, and remediate cybersecurity threats and vulnerabilities with respect to advisor or fund information and systems. Cybersecurity incident response to have measures to detect, respond to, and recover from cybersecurity. Second, the proposal will require advisors and funds to review and prepare a written report on their cybersecurity policies and procedures at least once a year. This annual review would include an assessment of the design and effectiveness of the cybersecurity policies and procedures, including whether they reflect changes in cybersecurity risk over time. The annual review is designed to require advisors and funds to evaluate whether their cybersecurity policies and procedures continue to work as designed and whether changes are needed to assure their continued effectiveness. Third, the proposal would require a fund's board of directors to review the written report and approve the fund's cybersecurity policies and procedures. These requirements are both designed to facilitate the board's oversight of the fund's cybersecurity program and provide accountability for the administration of the program. Fourth, the proposal would require advisors to report significant cybersecurity
after this,
incidents
I'll
to the
do it.
Commission on new Form ADVC on behalf of
I'll have to
itself
move
and
everything.
its fund and private fund clients within 48 hours after concluding that a significant advisor cybersecurity incident or a significant fund cybersecurity incident has occurred or is occurring. This confidential reporting would allow the Commission and its staff to understand the nature and extent of a particular cybersecurity incident and the firm's response to the incident and the potential systemic risks affecting financial markets more broadly. Fifth, the proposal would require the disclosure of cybersecurity risks and incident information to advisory clients, fund investors, and other market participants, including tagging fund disclosure and structured data language. These disclosure requirements are designed to enhance investor protection by ensuring cybersecurity risk or incident-related information is available to increase understanding and insight into an advisor's or fund's cybersecurity history and risk. Finally, the proposal would require advisors and funds to maintain certain cybersecurity-related books and records. Thank you for considering our recommendation. I will now turn it over to Jessica Wachter of the Division of Economic and Risk Analysis. We'll discuss the economic impact of the recommendation.
Thank you, Tom. Chair Gensler and Commissioners, cybersecurity threats have grown in sophistication, and for financial services firms, which safeguard client assets, among other functions, the stakes are particularly high. Indeed, cybersecurity threat intelligence surveys consistently find the financial sector to be one of, if not the most targeted industry. A cyber attack on a fund or advisor could compromise critical systems and client information and potentially lead to the loss of client assets. When any one fund invests in cybersecurity, the entire system benefits. This is in part because of the fact that the financial system is highly interconnected. It is also because a loss of trust may spill over to other funds. There are also important information complementarities arising from disclosure. More information about cyber events will lead to greater understanding
Of course, they
incidents
leave
and
that
greater
till
prevention.
last.
While the most direct
Shortening
benefits
the
are to
transaction
funds and their
settlement
investors, we expect that these proposals will promote capital formation by increasing confidence in the operational resiliency of advisors and funds and safety of investments held through these funds. We do expect these rules to have direct costs that may be passed on to investors. We do not anticipate that these costs would be material in the aggregate, but they may be significant to individual advisors' funds or their respective clients. In closing, I thank our colleagues from the Division of Investment Management and the Office of General Counsel for their collaboration, and I thank you again for your attention.
Thank you again, William.
Yeah, I want to hear
and
the
Jessica.
settlement
I'm gonna
stuff.
hand it over to you, Commissioner.
I was going to end it, but I want to hear that.
Thanks, Mr. Chair, and thanks to William, Tom, and Jessica as well. And thanks more generally to the staff of the Divisions of Investment Management, Examinations, and Economic and Risk Analysis, to Nancy Sumption and the
I
offices
agree,
of
Gam.
the Chief Accountant, Information Technology, and General Counsel, and others throughout the building who worked on this release. Although I'm unable to support today's proposal, I do appreciate all the work and effort the staff put into producing it, and I'm grateful for the time that they took to discuss my concerns and respond to my questions. Cybercrime is a uniquely challenging threat to our financial system, and I'm very much in favor of establishing a mechanism for registered investment advisors and registered investment companies to inform the Commission when they have suffered a material breach. As the proposing release documents, cybercrime results in billions of dollars in stolen assets, as well as significant legal and reputational liabilities. A properly designed reporting system can serve as the foundation for the Commission to assist industry in establishing strong attack-resistant systems. Public-private partnership is a treacly and overused term, but cybersecurity could be one of those rare instances in which the term is apt. The Commission, serving as a repository with up-to-date intelligence on trends in financial sector cybercrime, could provide registrants with practical, timely knowledge so vital to keeping one step ahead of the bad guys. For this to happen, however, the Commission would have to be willing to depart from the traditional regulation, examination, enforcement triad. That willingness is not evident in this proposal. That an advisor's or fund's system has been successfully breached shouldn't lead us to the immediate conclusion that the advisor or fund was lax in its efforts to protect client data and funds. Cyber criminals are devilishly clever and often benefit from state support. No investment advisor or investment company wants to have its system hacked, its data stolen and exploited, or its investors' funds stolen. Most firms are investing substantial resources in defense against breaches. We should stand ready to assist advisors and funds in the fight against cyber attackers. Absent circumstances that suggest deliberate or reckless disregard of known vulnerabilities by the firm, we should resist the temptation to pile on with an enforcement action after a breach. Rules that set forth detailed cybersecurity prescriptions could become an easy hook for an enforcement action, even when a firm has made reasonable efforts to comply with the prescriptions. Central to my opposition to the investment advisor rule proposal is that we have chosen to ground it in Section 206, the Investment Advisors Act's anti-fraud provision.
Minus 30.
Just as we regrettably did in 2003 when we established a general compliance rule for registered advisors, we cite Section 264 as the authority allowing us to impose cybersecurity policies and procedures. This approach doesn't make sense. First, Section 2064 states that it's unlawful for an advisor, quote, to engage in any act, practice, or course of business which is fraudulent, deceptive, or manipulative, and directs the Commission by rules and regulations to define and prescribe means reasonably designed to prevent such acts, practices, and courses of business as are fraudulent, deceptive, or manipulative. The rules under this section should be designed to prevent advisors from engaging in acts, practices, and courses of business that are fraudulent, deceptive, or manipulative. Here, however, the fraudulent, deceptive, and manipulative acts and practices and courses of business that the Commission seeks to prevent with the proposed rule are not ones in which the advisor is the perpetrator, but the victim. Second, taken literally, if an advisor that does not have good enough policies and procedures provides investment advice to clients, it's illegal. The proposed rule states, as a means reasonably designed to prevent fraudulent, deceptive, or manipulative acts, practices, or courses of business within the meaning of Section 2064 of the Act, it's unlawful for any investment advisor registered or required to be registered under Section 203 of the Act to provide investment advice to clients unless the advisor adopts and implements written policies and procedures that are reasonably designed to address the advisor's cybersecurity risks. While having good cyber policies is important, there's no apparent logical connection between the effectiveness of an advisor's cyber policies and the soundness of its investment advice. Deeming illegal all advice provided during a period in which cyber policies were deficient, in the estimation of the Commission sitting in its Monday morning quarterback chair, seems extreme. Third, and related, based on the language of the proposed rule, not having reasonably designed cybersecurity policies is a fraudulent, deceptive, or manipulative act, practice, or course of business. We included similar language almost 19 years ago to the day when we proposed the compliance rule for registered advisors. In response to concerned commenters, we slightly tweaked the regulatory language to remove explicit reference to fraudulent, deceptive, or manipulative acts, practices, or courses of business. This fig leaf was an acknowledgement that a failure to establish policies and procedures doesn't fit comfortably within the framework of an anti-fraud provision, but the underlying problem remained. Indeed, the adopting release made clear that the changed language, quote, which responds to commenters' concerns regarding the optics of the rule, does not change its substance. Failure to comply with its terms will result in a violation of Section 2064, end quote. I take cold comfort in the fact that the Commission, despite the compliance rule's uncompromising language, has never treated an advisor's failure to establish reasonable compliance policies and procedures as a basis for arguing that the advisor's provision of advice was unlawful. The fact remains that the placement of the compliance rule under the authority of Section 2064 recasts a flawed set of compliance policies and procedures as an existential moment for the advisor. As a historical aside, the diligent reader will note that my name appears first on the list of SEC contacts responsible for drafting the final rules that we issued back in 2003. My primary focus was on the fund rule, which does not have a similar authority problem, not the advisor rule. But as a member of the team, I would be remiss if I didn't at least
Good deal,
acknowledge
bro.
regret
Congrats.
that I had not thought then to raise the concerns that I'm expressing today.
Congrats.
Using the Commission's anti-fraud authority rather than our general rulemaking authority in Section 211 of the Advisors Act, our record-keeping authority under Section 2064, or Section 203E6, which sets forth policies and procedures as a defense against a failure to supervise charge, doesn't make sense for a generic compliance rule. It makes even less sense for the cybersecurity rule that we're considering today. As I noted earlier, the
I want to hear the settlement.
That demands transparent
I want to hear the
cooperation
settlement stuff.
between regulators and financial firms for the achievement of a shared goal. A cybersecurity rule that is styled as a cudgel will not facilitate such cooperation. A cybersecurity policies and procedures rule may not even be necessary to foster the investments in strong cyber defenses, dialogue, communication, and cooperation that we seek from investment advisors and funds. We have a number of regulations, including Reg SP, which requires advisors, among others, to have written policies and procedures that address administrative, technical, and physical safeguards for the protection of customer records and information. These policies and procedures must be reasonably designed to, among other things.
I can mute her. I want to hear the settlement, whatever they called it. The shortening of the transaction settlement cycle. I want to hear that, and it's after all this shit. I can mute her, but I definitely want to hear what they're doing with the settlement. We'll mute her in between. Yeah. Oh. Of course, they saved the best for last. Yeah, I know. It's crazy. Crazy. I could have. I wasn't, though. I got enough Red Bull in me to keep me up now. But no. She could put you to sleep. We'll let her yip her lips there for a minute. Let me see if I can. Real quick. I think it's. If I had to draw one off of that, and it's technically down here, and then you got the W box top. That one there doesn't really go anywhere because it goes into reversal, so you'd have to use this one, which would put it an hour. Got a half an hour left in this candle. This candle were to do it there. The next 1 hour candle were to do it. There. So in this hour 19 and next hour 19:30. And that's if this is the third. I don't know if this is one up here or not. 2 and then 3. Looks to me like this is 1, this is 2, 3's down here, which would pull it to the W, or the middle of the W, and then you'd have to pull one from here through the W, and there's nowhere to put it because it box topped here, compact W here, and then went bullish here. So it's technically in a bullish grind up right now. That's like, I guess you'd call it a grind up. It's more of a parabolic, but it is technically a grind up because it has a W in between. So I'm just going to come back and use this one as a macro and see if that plays out. So that's the way. I know those are a little bit crooked, but it's running. For audio listeners, real quick, AMC's up 7.9%. 1772. GME's up 3.1%. 119.15. BBIG's up 4.32%. 315. SPY is up 1.29. IWM is up 1.55. They're capping GME a little bit, letting AMC run today. AMC just crossed over 8%. 1775. We'll leave it at that and look at that as the potential macro third from that previous one, which is quite a ways up. So we got some room if that's the case. Or is that where I just put it right there? Yeah, right there. That right there. We can see the first target. Okay. All right, let's see who's talking. Yeah, the other woman's talking.
Notification to the commission of certain cybersecurity incidents. This will enhance our ability to monitor and help address cybersecurity incidents that could have potentially broader system-wide impacts. These provisions raise a number of questions. For example, the proposal would require notification to the commission of an incident within 48 hours, but the notification to an advisor's clients has no specific time frame. Instead, that notification.
Congratulations, Rob. Let's go.
So a question I have is, should investor notification be tied to?
Let's go, Charles. 25%, 35%. Let's go, you guys. Congrats.
Investors need to know about these incidents. I welcome the public's input on these and all other provisions of the proposal as we work to develop a transparent, nimble, and accountable framework for investment advisors and funds.
Y'all are hitting it every day, man.
Support to the staff.
Every day.
Future recommendation on cyber
21 on PayPal. Let's go.
So I'm pleased to support this proposal. I want to thank the staff and the divisions of investment
PayPal's
management,
ripping.
economic risk and analysis, as well as the general counsel.
Yeah, everything's pushing.
Thank you.
Let's go, y'all. Congrats.
Thank you, Commissioner Lee.
Y'all are hitting it every day. Every day.
So the threat of cyber attacks on the U.S. financial services firms is one of those issues that keeps me up at night. Financial services firms are leading targets of cyber attacks because that's where the money is. Cyber attacks don't just have the potential to disrupt individual firms and their immediate clients.
Winner, winner, chicken dinner.
They have the potential to cause market-wide instability. The G20 recently warned that cyber attacks could, quote,
y'all are
disrupt
kicking
financial
ass.
services crucial to both national and international financial systems, undermine security and confidence, and endanger financial stability. Investment advisors and funds manage tens of trillions of investor dollars. They can be targeted directly or
30%
indirectly
on PayPal
through a
so
web
far.
of service providers that many firms
Let's go,
use
The Rock.
to conduct business.
Congrats, brother.
The latter creates a
43 on
broad array
PayPal.
of potential exposure.
Let's go,
Crucial
Ken.
business functions can be adversely
Congrats,
impacted
brother.
in numerous ways.
Let's go.
These potential points of vulnerability include the loss of customers' personally identifiable
Y'all are
information,
killing it.
the inability to access accounts or trade, the theft of intellectual property,
Killing it.
confidential or
Every
proprietary
day.
information,
AMC's up
or even the
10%,
theft or loss
$18.
of client assets.
10%, $18.
There's been an increase in the frequency and sophistication of cyber attacks, as my colleagues have noted. This means a corresponding increase in risk to investors whose assets are held by those firms. Given these realities, robust cyber hygiene
Let's go,
practices
Drake.
are critical, both to safeguard investor money entrusted
Thank
to
you,
firms
Lila.
and advisors,
It's all them.
and to guard against
all them.
market-wide instability.
AMC crossed over
Today's proposal
10%.
would require all registered advisors and funds to design and implement cybersecurity policies and procedures in order to be prepared for future cyber threats. Such policies and procedures would be subject to record-keeping requirements so that deficiencies can be identified and addressed. Additionally, investors need relevant information to inform their investment decisions. And this holds true when it comes to cyber risks. Today's proposal would require advisors and funds to tell investors about the cybersecurity risks they anticipate, how they would handle those threats, and the nature and scope of any significant cybersecurity incidents that occurred in the past 2 years.
What to do, but
Further, the
teaching us
proposal
how
would
to do.
require regulatory reporting
Welcome,
of any
Boom. Thank you,
significant
brother.
cybersecurity incidents to the Commission
It's all you,
within
my
48
friend.
hours and prompt notification to investors.
It's all you, brother.
This
Thank
would
you,
give
though.
the Commission data to assess trends, identify emerging risks, and help coordinate responses to cyber incidents that have the potential to cause broader disruptions, as well as providing investors with information they may need to respond to the incident. I support today's proposed rules to enhance cyber practices by funds and advisors. And as Commissioner Lee noted, this is just one piece of the puzzle. This critical issue requires a comprehensive approach, and I look forward to future cyber-related commission actions in other areas of our regulatory remit. Thank you again to the Chair's Office, to the staff of the Division of Investment Management, to the Office of the General Counsel, to the Division of Economic and Risk Analysis for their thoughtful work for today's proposal, and I look forward to reviewing the comment letters and working with the staff as we move toward a final rule. Thank you.
Thank you, Commissioner Crenshaw. Thank you all, fellow commissioners. The Commission is considering a set of comprehensive reforms, as has been said, to improve cybersecurity risk management for registered investment advisors, investment companies, and business development companies. And I'm pleased to support the proposal because if adopted, it would improve advisors and funds cybersecurity risk management and incident reporting. I think the SEC plays a key role as a regulator of the capital markets with regard to SEC registrants, including the entities in today's release. And cyber risk relates to each part of our three-part mission, and particularly the goals of protecting investors and maintaining orderly markets unfortunately, too often when the cyber events occur. Cyber incidents, unfortunately, happen a lot. Given this and the evolving cybersecurity risk landscape, we at the SEC are working to improve the overall cybersecurity posture and resiliency of our registrants. Now, incidents can lead to significant financial, operational, legal, and reputational harm for advisors and funds. More importantly, they can lead to investor harm. Proposed rules and amendments are designed to enhance cybersecurity preparedness
What are you
and could
talking
improve
about, Chris?
investor confidence in the resiliency of advisors and funds against cybersecurity threats and attacks. Registered investment advisors, investment companies, business development companies currently have to comply with various rules that may implicate their cybersecurity practices, such as books and records, compliance, business continuity regulations. Today's release builds upon those requirements, and it would strengthen financial sector registrants' cybersecurity hygiene and incident reporting requirements in the four key ways that the staff mentioned, requiring investment advisor and funds to adopt and implement written policies and procedures related to cyber, reasonably designed to address the risk and the incidents of cyber. It would require related record-keeping obligations for those advisors and funds. It would require confidential reporting to the Commission by investment advisors if the advisor or the fund they advise is subject to a cyber incident, certain incidents. And then it would require disclosure by advisors on the brochures. These are these periodic brochures called ADV, and registered funds on registration statements regarding certain cybersecurity incidents. I think such reforms could help reduce the risk of these registrants for these registrants by significant cyber incidents. I believe they could give clients and investors better information with which to make decisions, create incentives to improve cyber hygiene, and provide the Commission more insight into the cyber risk of these intermediaries. As has been mentioned by fellow commissioners, I've also asked as chair the staff to make recommendations up to this Commission, considering with respect to broker dealers, with respect to something called regulation systems compliance and integrity, and to make recommendations around intermediaries requirements with respect to customer notices. I believe that was mentioned earlier, something called regulation SP, and third-party service providers. But today is just this rule. I am pleased to support today's proposal and, subject to Commission approval, look forward to the public feedback. I'd like to thank the members of the SEC staff who worked on this rule, including, as I mentioned, William earlier, Sarah Tensikoff, Melissa Gaynor, Brian Johnson, David Joari, Amanda Wagner, Christopher Staley, Juliette Hahn, Rachel Kua, and Tom Strumpf, who you heard from earlier, all from the Division of Investment Management. From the Division of Economic and Risk Analysis, Oliver Richard, Alexander Schilla, Charles Wadworth, Machi Schaeffler, PJ Homerdy, and of course, Jessica. From the Office of General Counsel, Meredith Mitchell, Marie-Louise Huth, Nancy Sumpton, Natalie Shioji, Kathy On, Alice Wong. From exams, Keith Cassidy, Jennifer McCarthy, Ukravi,
Jenny McCarthy.
Rockis, Alexis Hall, Dan Dual, Christopher Mulligan, Joseph Murphy, and then Corey Schuster from the Division of Enforcement, Luna Bloom and Ian Ruberains from the Division of Corporate Finance, Ted Shalke from the Office of Information Technology, Umid Barav and Shirzad Niazi in the Office of Chief Accountant. I'd also like to thank some of the folks, not by name, but over at the Cybersecurity and Infrastructure Securities Agency for their
Jimmy.
advice and consult just about cyber risk as
Let's
well.
go, Jimmy.
It's a team sport, as Jen Easterly, who runs CISA, says at times. We at the SEC have a role, but there's, as Commissioner Peirce said, it's often this is really led in the private sector, but we in the public sector have our role, and we at the SEC are part of a team that includes many other agencies of the U.S.
Let's
government.
go, Rob.
With
Congrats,
that,
brother.
how do commissioners vote on today's division's recommendation on the proposed rules on cybersecurity risk with regard to registered investment advisors and investment companies?
No.
Yes.
Yes.
Yes, the recommendation is approved by a vote of 3-1. And again, Vanessa Countryman will send it off to the Federal Register, but also
EBIG just ripped off the $3.40 up
shortly,
13%.
and we look forward to the public consult and comment period. Next up, we will consider whether to propose
350's
rules
next.
and rule amendments under the Securities Exchange Act to reduce risk in the clearing
Then
and
386,
settling
I think
process
it
for
is.
securities, including by shortening the standard settlement cycle for most broker-dealers transactions from 1 business day to 1 business day from the current 2 days. The rule has much else in it.
I hate these motherfuckers.
And with regard to broker-dealers,
43%
clearing
PayPal. Let's
agencies, we
go,
also
Steve.
consider
Congratulations,
whether to
brother.
propose rule amendments under the Investment Advisors Act to require investment advisors certain related records. I will turn it over to Hao-Shang Zhu, the Director of Trading and Markets, to present recommendations. Hao-Shang.
Good morning, Chair Gensler and Commissioners Peirce, Lee, and Crenshaw. Today, the Division of Trade and Markets recommends proposing amendments to Rule 1566-1 of the Exchange Act to shorten the standard settlement cycle for most security transactions from 2 business days after the trade date, or T+2, to 1 business day after the trade date, or T+1. In 1993, the Commission first adopted the rule to establish a standard settlement cycle of 3 business days, or T+3. In 2017, the Commission amended the rule to shorten the settlement cycle to T+2. Since that time, the Division has continued to explore the possibility of further shortening the settlement cycle. Market participants have also taken important steps to identify the necessary technological and operational changes to establish a T+1 standard settlement cycle. Significant market support has emerged for such a change.
Wow, look at
Period of increased market volatility, such as in March 2020, following the outbreak of the COVID-19 pandemic, and again in January 2021, following heightened interest in certain meme stocks, have highlighted the systemic role of clearing agencies. Certain clearing agencies serve as clearinghouses to manage market, credit, and liquidity risk among broker-dealers and their clients. The risk management is critical to the proper functioning of the securities market. A key component for risk management